Good day crypto traders. Over the past 24 to 30 hours, the price of Bitcoin has shown a lot of bullish momentum, which has led to a huge rally for many other cryptocurrencies. After a minor pullback, this development is likely to continue. Therefore, investors who missed this rally should exercise caution to avoid entering the market too late and becoming entangled in a wrong path. After weeks of consolidation around $19,000, the Bitcoin price surges 5.6%, making it the first volatile move. At $19,520 and $19,793, respectively, the 30-day and 50-day exponential moving averages, EMAs, have been broken by the surge. Especially from a market structure perspective, this is a significant development because it suggests the possible end of the consolidative regime. Investors need to pay close attention to the Relative Strength Index, RSI, even though the rally is positive. The Bitcoin price has been rejected 6 times since April. When this momentum indicator is at 60. Market participants should either wait for a pullback or a flip of the RSI resistance level because there is a good chance that BTC will be rejected at this level. The $20,742 resistance level will be reached even if the Bitcoin price disregards the RSI's resistance level. Therefore, entering a long position at this time would be nothing short of FOMO and costly for investors in the event that Bitcoin reverses course. A retest of the 50-day EMA at $19,793 or the 30-day EMA at $19,520 are the best locations for accumulation. Before retesting the subsequent targets at $22,181 and $23,711, a retest of these levels could provide Bitcoin price with the support it needs. We are not yet out of the woods, even though the overall outlook for the price of Bitcoin and the cryptosphere appears to be improving. The bullish thesis for Bitcoin would be invalidated if the daily candlestick closes below the swing low of $18,600 on October 21. This would result in a lower low. As a result of this development, the price of Bitcoin may attempt to reach the $17,593 low on June 18 as a support level. Ethereum rises despite the fact that its classification is still in question. Its course appears to be becoming more apparent. The price of ETH has increased by 14.62% in the past week, bringing the altcoin king to $1,489. This rise caused ETH to surpass the month-long resistance level and close above it on the 4-hour time frame. According to the daily chart's intraday fluctuations, ETH reached $1,500 at one point. However, Ethereum is now closer to being overbought as a result of this rise. The region above 70.0 on the Relative Strength Index, RSI, is a trend reversal trigger zone. As long as ETH avoids it, it can continue to rise. As the main bearish factor for Ripple, XRP, the stronger dollar, is taking a big step back for the second day in a row, the price action has opened up a very big room for a rally. Even though the price of XRP doesn't seem to be changing at first, it will catch up soon. According to projections and forecasts, the rally may achieve a gain of 21%, allowing it to reach the September high of 56 cents. As its biggest rival, the stronger dollar, has taken a firm step back for a second day, Ripple price action is expected to rise broadly. A well-known Wall Street Journal journalist predicted that the Fed might begin to slow down its rate hikes by the end of the year, which led to the dollar's reorganization. The dollar's rebalancing as a result of this has resulted in a decline of approximately 200 pips so far. For the time being, the price movement of XRP has not been affected as much by the weaker dollar as Bitcoin and other peers have. It is reasonable to anticipate a delayed effect. As a result, the price of XRP needs to do one thing: break the 48 cents level, which shouldn't be too hard, and it should be easy to get to 56 cents, where 21% gains can be booked. It is abundantly clear that the current decline in the value of the dollar is supported by the expectation, aspiration, and hope that the Federal Reserve has reached its tipping point and will soon or even next week announce that it will begin to reduce the pace of its rate hikes. However, if the Fed decided to stick with its aggressive policy stance, it would suggest that the market swung too quickly, which would cause the dollar to be bid once more. In such a scenario, the price of XRP would fall back to $0.4228 and might even fall to $0.3710 in the coming weeks. The midterm elections are also expected to be risky. After its volatile move over the past 24 hours, the Cardano price is in a precarious position. Investors must exercise caution to avoid becoming trapped by late market entry. Waiting for ADA to return to critical levels would be a better strategy. The lower limit of the $0.380 to $0.609 range and the 30-day exponential moving average, EMA, at $0.393 shattered the Cardano price on October 26 by 12%. The resurgence of bullish momentum is evident in this move, which is likely to push ADA higher in the coming days. Market participants need to be patient and wait for a pullback. Despite the optimistic outlook, investors need to pay close attention to Bitcoin because ADA trades between the 30-day and 100-day EMAs at $0.393 and $0.413, respectively. The major cryptocurrency's price would fall below the $0.393 support level, which would be followed by a retest of the $0.380 or $0.372 levels. A better risk-to-reward ratio would result from accumulating ADA at these levels. However, the targets would include $0.434, but a reversal of this level would enable the Cardano price to surge higher and return to the $0.458 100-day exponential moving average and 50% Fibonacci retracement level. After a retracement to $0.372, investors could anticipate a 32% increase in the Cardano price. A break below the $0.372 support floor will indicate that buyers are not committed, even though the Cardano price is improving. A daily candlestick close below the $0.348 level, which would result in a lower low and disprove the bullish thesis for the so-called Ethereum killer, could be the result of such a development. Cardano's price may attempt a recovery rally and form a double bottom at the swing low of $0.329 on October 21 as a result of this development.